just jump right into it. I think trigger points are relatively straightforward anyways. So, well, what they are is straightforward. How to do them is another thing. So
my problem is I did exactly the wrong thing. I entered on trend break.
Mm-hmm.
So,
but it makes sense, right?
Yes, it does.
You never buy trend breaks. That's something that people get very confused. That's something people have very, very backwards. Trend breaks are great. They fuel moves, but they aren't entries. They're trigger points. Trigger points are not entries. Entries are hold levels, and hold levels continue to hold until a trigger point is met on either side. So if you simply enter a hold level, like even look, if you simply enter a hold level, right?
Can you share again, please?
I think I clicked the wrong button.
See, you'll see a 1 hour. You'll see a 1 hour uptrend that I saw it breaking, and I exited that, but it was crazy.
Yeah. So you simply have a hold level, right? It creates your trend. You've entered the hold level. The hold level does hold. That creates your trend because that's going to be the swing low, right? Like that's the thing about a hold level. A hold level, if it holds, will always
thanks, Nico.
Be a trend creation. Okay. So when you have this hold level here, if this holds the move, if this is an untested hold level, it'll always create a trend. Okay. So that's like one of the important pieces to understand here. You hit a hold level that's untested, it creates your trigger point. So a hold level creates the actual trigger for the move. That gives you your next hold level, your polarization, blah, 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 all that stuff we talk about. Fine. Your hold level creates that trigger point. You're in the trade. You can never be unprofitable because until this breaks, you'll never be losing money. So you either simply hit a target up top. Now that comes back to defining profit caps properly. So you either hit a hold level up top, okay, or you trigger out of the trade below. But to buy this trend break is silly because you should have already been in the trade from here, right? Like
do you see where your red text is around 6 a.m. where it begins?
Oh, Dilbert's muted. He can't tell you.
Yeah. Around 6 a.m.
Do you see where the whole level is touched around 6 a.m. on yours?
Yeah.
Now, you see the way there's an uptrend that starts off that, and I entered on the break of that little uptrend.
1 second here. Let me fix Dilbert.
Let me.
Here, I'm going to do it like this. 1 second. I'm going to mute everybody and allow everybody to unmute themselves. So if anybody wants to talk, then they just unmute themselves. Because I think some people have. There you go.
I'm fixed.
There you go. So Pat, here, what you've done is you have some kind of uptrend that you entered. I'm going to delete my X's here. And that becomes a local trigger point, right? Like if you're in that moment, let's see the replayer tool.
So that white one there, yeah, that was it.
You're in this moment and you're saying, oh, my hold level is hit. I'm going to exit based on this. But this is a scalp trade, right? Like this is a scalp trade. And you'd probably want to find a higher time frame.
It was a 1 hour. It was on the 1 hour that I entered.
Yeah, but then simply your target would have been this right here anyways. So your target is hit, or if you're going for a long.
Okay, well, I'm just going to wait to actually talk about that. I'll just get through this little piece here.
Right, like you're using your trend because this hold level gets hit. It creates your trend, which gives you kind of your polarity in the move, right? Like it says, okay, hold level here. This then moves to here. Don't exit the trade until my trend is hard closed or broken. We're just going to say broken. Don't enter it until it's broken, right? So you have polarity here, which is now going to be moved to here, right? And then once that breaks, it's just going to go to the higher target, right? So you're just polarizing pieces of the move to the move. So you're like your trigger point there. Your trigger point there was a scalp, right? Like just like I said, like very low, the most local, as local as it gets is just a scalp trade. You either hit a target on one side or you exit on your trigger on the other side. If you do this, you can never lose money because you hit a hold level holds, and you're in that trade in profits until one of two scenarios happen. Like theoretically, if you're buying hold levels, okay, if that hold level holds, you should always exit with profits, no matter what. You should always be exiting with profits because from that moment on, you've got a trend that's created, right? So like here,
I suppose what concerns me is that I shorted the break of that small uptrend rather than longing. And it's how I got it completely backwards is it bothers me.
Right there. That's it right here in this moment, right? So that's this guy right here, right? So that's the low of the move on the higher time frame. Your hold level is right here. Your hold level is hit. Your trend is created. You are polarized if you lose this.
I think this is where you would go and see, like, it's true, everything I'm saying about the move being polarized. But I think in this case, if you're using a trigger point to move out of the trade, I think you need to go and look at the bigger time frame, depending on how long you've been in this thing. So if you were in from one of these lower levels, I think you need to use the higher time frame to see where you trigger out of this move. There's too many times where I see a trend gets hit like this just to go to a lower level to move up through the trade,
which moves to here, which is now here. So you're going back to the beginning of this trade. If you have,
you always have to look at your ladder points when you're kind of deciding your triggers.
Delete this guy here. That's fine. If this hold level holds, right, like this, you create trend, which means you always will exit in profits. You've created trend. Once that trend closes, you take your profits. Now, profits could be 2%, 20%, 40%, 60%, 80%, 100%. As time goes on and this trigger point doesn't release, you're making more and more and more. That is more of a position or a swing trade. And like I said, you have targets on the other side. So you have to give yourself your profit cap of where this thing can possibly go, right? So, at first it's here, right? So, depending on what you want out of this trade, like this is personal decision. Always going to be better to take more trades because you could simply go right there. Your first trade is executed, rebuy right here. So what we're going to do is we're just going to take this and move this to here and move this one to here. So now you have another trade that you could execute.
Yeah, this is all very straightforward.
And you can
so
continuously
far.
execute these scalps until this trend breaks. So then you just, okay, we got perfect entry there. We're going to go to our next point, which is up there, and it just reached that there, right? So then you're either trend or level. And then
like on this here, when you're at the 15-minute, you go to the hourly to see the hourly level here, and then that's your clear exit there.
So you've got a new trade that happened, and you can consistently, you can either take your profits on your target, right? You might even want to hold up to this, or you could simply just exit this trade. If you lose polarity, it would be the first spot to exit this trade. Or you lose your trigger point, that would be your second. But you can, if you hit a hold level and a hold level holds, you should 100%. There should be no reason you ever don't make profits on that move. So it just becomes a very fine process of pick the right hold level. That holds, understand the architecture going forward, right? So part of the architecture of learning chart architecture is using a lot of these different kind of combined theories together that we'll be doing over the next little while, right? Like today was kind of the first time we've ever done like procedural mixed with technical, right? There's a technical hold level, there's a technical trend, and then there's a procedural way.
We're going to go through live examples. I think that's what I'm going to do for
this is
today's lesson is go through
lose money on this trade if
live examples of trigger points. I think that's a better way to do a more advanced outlook on trigger points
kind of in a way
instead of
lose money on any trade.
Watching this, I think we just go and build out a bunch of scenarios is going to be much more beneficial because this Q&A is definitely going to be very limiting. We're going to be able to basically accomplish the same thing as this Q&A. We just scrub through this.
That's the problem with the trend breaks. It's like on them.
I think it's smarter here.
You don't necessarily
go design a bunch of trigger points and talk about trades because Q&A is going to be basically what we're doing right now. So this kind of Q&A lesson.
Right, like we have to have good trades. We have to be paid.
Yeah, this Q&A lesson. I remember these lessons. It's better to go live. Well, we could start with CAD. We could definitely start with CAD. We're already here. So CAD USD or DXY. Let's go to DXY. It's a little more global. Oh, look at that. DXY hit my target from back in January here. Nice. Not bad. Good job, DXY. Do we want to do crypto? Do we want to do stocks? What do we want to do today? What do we want to do? Everybody wants crypto. DXY. We'll do DXY. We'll start with DXY. Monthly to monthly time frame, of course, trends first. Very simple, very straightforward. We're not doing any kind of advanced technicals today. We're just talking specifically about trigger points and how you would manage these trades. First things first, I could definitely see us going up to this right here, which is your reverse. This reverse is possible as well, but that's going to be more of an attack on trend. So we don't really need to mark this one. Kind of your point of polarity becomes this right here, as it represents both this reverse and this level right here. So this is a very good level, slightly above this, which can reverse that in the future. So that's kind of your first point there, is that your trend is going to be hit and created somewhere there. Very straightforward. Trigger point. So we can start summarizing where a good trade is to get into. So yeah, you've got weekly to weekly here, which is what you want to put first. I don't think you have anything on the, well, monthly, sorry. Yeah, you're not going to have anything on the 12 month. You're going to have this like this. See here. I guess we could snap to the monthly first. You don't have anything monthly, so you're going to move down to weekly here. So that's fine. That's like this. That's where you get your trend, and that's what you see there. So your trends are good. Where would you get on a trade on this? So kind of the trigger point would be this trend if you were already in a trade. And you got to think about trigger points in reverse. When you're thinking about trigger points and scoping out these trades, you think of them in reverse. Like if this trend broke, which level would it attack? Because most people would try to get into this trade here. But the important thing when we're designing triggers, and you know, the designing of a trigger point to get into a trade starts with perfect entry at first. So like you would try to enter here. However, you could say, well, what would be the better entry? This breaks it out already as the origin, so we know that's going to be the point that supports it. The origin breaks out the move, it hits there, supports it. So if this trend broke, what would be the logical point for it to attack? Well, it would go attack this here, or whatever's protecting this break. So I would start with this here. Look at the interior range, which then goes to here, which then goes to here. So I would be looking more at, this was already hit, moves up to here, that's already hit, moves up to here. This is not hit, and this likely protects the leg from breaking. So that would be your first kind of idea as where you want to design your entry for your trigger point, because people would enter this, but realize that your trigger points, they also break the trade down, right? So like this trigger point is likely to attack this level, and it's going to likely hard close back over top of this. So you've got kind of your first idea designed out on DXY. So this one becomes pretty simple. It becomes pretty simple. You allow your trigger point to show you where your target is going to be. So not only do triggers act as trade spots where we exit trades to protect capital, they also act as what could break a target to attack something next. So you always have to look at trends as trigger points and what they break. And if you were out of this trade there, you know, would you really be entering right here, right? Like, yeah, probably not. You'd be going down to the range, which would give you like a nice clean from here to here, which would then give you like your range here. So like if you go and hit this in the future, then you have your nice range trend, and your trigger point gives you your range trend. So that's another thing to realize. If you don't have kind of your range trend in place, if you don't have that, then your trigger point can create it. So again, hit here, trigger out of this trade, hit this level in whatever scope of time you hit it, right? Go down, hit this level, protects the leg of the move on the larger time frame. I believe that would be hit here. Yep, protects the leg of the move, triggers a trade on the reverse that's already kind of flow to, like you've followed your daily candles, daily to daily to daily into this candle here. It's like the perfect trade. So that's great. That's great. You've got like a really nice trade. And then you have your trigger point, which would be this. So we're designing a trigger point on this trade for the future. We're designing this as the scenario that's going to happen in the future for the trigger, right? So it's like you don't even need to trigger in that moment. You've already decided what's going to be the trigger on that trade. So you've got your entry and trigger predefined. So your whole trade is like scoped out already. Break this trend, go down to the leg of the move, hit the hold level on the leg on the reverse. It also creates the range trend, which is going to be your trigger moving forward, unless you're using a more interior trigger point in that moment. Say it comes down, right? Breaks this, hits this, create some kind of thing here off of, you know, whatever hold level back here, or whatever is inside this part of the move, then you could use this as a trigger. Then you have two options as a trigger. You have what's going to be a scalp. Well, this is not going to be a scalp trend because these are weekly time frames. This is going to be a position trigger, right? Let's actually go back and talk about that first. So for anybody who's watched the new strategy series, I do talk about every 10 scalps should be one swing, every 10 swings should be one position. So in theory, one of them every 100 trades should be a position trade. This is what you're designing here. So when you're designing this trigger point, realize designing a position trade. Simple, right? You're designing a position trade because you're using high time frame stuff, weekly trends and triggers. So all your information in here, like you're designing a position trade. And if it comes to fruition, this can be what your swing trade dictates, right? And this can be what your position trade dictates. So when you make these trigger points, you can also start to go like this and start designing what they can represent. So that's like the next step to trigger points. You start designing what they actually can represent in the move. Like this would be a position trade. This would be a swing trade. Scalp trades would exist all in here, right? So you don't have to go into lower time frames for that. You can do that. But this is like a really good way to do things is to, this is the middle, it's really bothering me. There we go. This is like a really great thing to do with trigger points is you use your trigger points to help you decide what time frame you're going to be in the trades, right? So that's really cool thing to do. Go to crypto. Excuse me. Sorry, guys. Oh my God. Apologies. I couldn't reach my mic mute in time. Just kind of came over me. I think we need to hide a lot of this stuff here. We need to just like delete all of this junk. We don't need it. We can leave it and go through a quick review of the stuff we were doing, but a lot of this stuff wasn't us. It was in my recording. So I remember last week we left off talking about where this trade could go, and we had the 15-minute that we worked down inside the daily. So let's see how that ended up playing out. Bless you. Thank you. You have the daily here, and then we had, no, it was up here. We had the daily here. That's what we were looking at. Okay, good. We already have that gray line. So we had the daily here up at, yeah, okay. And then we were working down to find the time frame that would have been the smartest inside of that range. So this was already tested. So you've got that there. So you got to keep moving down in ranges, looking for the piece that's untested. That's the reverse right there. That can't work. So this reverse would be next right here. Down into that scope of this move right here, would have the 15-minute tested right here. So then this is the one we were looking at last week. You have the 15-minute tested here, and then you have the next reverse tested right here, I believe that was what we marked. Yeah, that is what we marked. So rewinding back to last week, I think this was a pretty good example live when we did this of what your target would be. Hopefully some people were taking this trade. I know WD and I were talking about this a bit, and stuff inside that daily level, but at least now you guys are starting to understand like how like perfect levels are found, right? Like good, I wouldn't say perfect, but really, really amazing levels that can give you a lot of dictation and you know, hitting this daily level. Yeah, we hit the daily level, but look how much deeper we went inside of it, which was, you know, again, pretty great. So that's fantastic. Where do you build off of from here, right? Where do you build off of from here? Well, your next daily level, and this was already hit. So you're laddering down off of your daily level. So now you have to go and see if there's any other kind of pieces that you're missing here. So instead of having red representing the daily, we're going to go here. And this is important, designing the trade for trigger points. So you can say, okay, fine, 4-hour reverse is hit. You'd be on your next level here, which is that 4-hour reverse. This backside was already hit, so that reverse isn't going to be a candidate for going to attack. This is going to be rather, instead of going after a level, creating a ladder point, right? So now at this point, we can actually just create our next trend here. So this is saying ladder point, right? Not reverse level. This is just creating the ladder point because this is already tested. And now you've got this tested as well, which is pulling back right now. So everything in these ranges are pre-tested. The only thing you can maybe look for is saying that 15-minute hold was tested, right? Yeah, that's tested. That's tested. So now you're here, right? Now you're just simply here. So maybe this could also be the ladder point. Really, this is going to give you the information you need going forward. Yeah, you could be right here. This is going to give you, because the front side is so close anyways, this is going to give you the information you need forward to see if this thing is laddering down or if this is going after old levels from above, right? So if you go and attack, say, this 4 hour here, you know you're laddering down off reverse 4s, which is going to give you your next target, which is this, right? So that's very straightforward and simple. If you hit this, this becomes the target adjacent. If you hit this, it was a 15-minute trail. So let's go like this. So whichever level you hit next is going to be, you know, crucial to understanding how you create a trigger point, how you create trends, which trends you use. It's going to give you all the information you need to know if it's going after the 4 hour or the 15, because those are two different things. I believe this one was that was the 15. Not going to be this, sorry. This one here, we have to move this down a bit and mark this yellow. So important information to be gleaned off those two. And then depending on which level it hits, you're going to be designing trigger points as scalp swings or position trades. There is no position triggers here. I don't think so yet anyways. I can't really see any, but predefining what kind of, this bigger here. Predefining your levels gives you your trigger points. So for example, if you have this trend here and you go after trend, right? Like say this is the scenario like this. If you go above this and hit trend and then the slightly above trend and pull back and down, so you're kind of in between two levels, you know it's trend. So this trend becomes your trigger point if that's kind of the scenario you build out like this and you hit this and you kind of do that and then fail. You know it's not going to be a 15-minute trail, or if it is, it's going to be a candidate for a reverse, and you know it's not going to be the 4 hour. So what's going to happen is you're going to go and you're going to break this trend in the future and create a cycle against whatever larger levels are there. So hitting this trend makes this the trigger point. Hitting the trend makes the trend the trigger point because you know that's what it's holding. Hitting this 15-minute level makes it so that you have a shield in the move. So that's like a different type of trigger point, right? Like if you hit this 15-minute level, you must develop the next 15-minute level. So if you come up here like this, you hit this level, and then you kind of come and linger around here, you must create another 15-minute level to hit in the future. If you can't create that level, that can be a trigger point, right? So that's how you would trigger out of this trade. It would be more like a scalp trade. So you take this position as a short, knowing that it created the 15-minute trail from wherever that level was, from here down to here, like this, down to here, right? Like you just followed that trail of 15-minute level. So if you create that 15-minute level, you know you have, or if you hit that 15-minute level, you know that you have to go and create the 15-minute hold for the future. Like you have to create the moment for the future, or there has to be a reverse. Like if there's a 15-minute level there, it has to like go and blast kind of over top of these things and then fail down, creating a 15-minute reverse here. So that would be your trigger or your shield in this trade. And that's how you would do that. If you go, I touched the 4 hour, but forget that 4 hour that I touched it. It's just pretend like we didn't hit it. If you go after that 4 hour, that's going to be the thing that you have to create, is you have to create that 4 hour move right there. So depending on which level you hit here, right? Whether it's this, or if it's like in between at some moment at trend or out here below it, realize that those are your trigger points, because the level you touch, it has to create that going forward in the future, which I think makes a lot of sense, because you can't have the candidation for your next level, right? Like you can't go up and attack this 15. And if you don't create a 15, your whole, like if you just hit this and bounce straight off like this and your 15-minute level is here, like once that goes, like the move is gone, right? So you would use that as your trigger point here. If that's the scenario, you hit your 15, you fall straight down and create this kind of move down where that 15-minute gets created. Even if it's this low, that becomes your trigger point. This would be a shield to the move because it's representing polarity, but you also use that as a trigger on your shorts. So I think this is really cool when you start to have trigger points and shields and you start combining those theories to understand like what, like the point of it is what gets me out of this trade and profits. So if I short this level, what gets me out? So then you build that criteria in this exact moment, whether you, again, if you hit the 4 hour level and you kind of stay here for a while and create another 4 hour level here, perfect. That's going to be your release for the future. Or you could use trend and you could do kind of like a twofold trade, right? Like you could do that. This is the revert. This is the trigger for the future, which also acts as a re-entry. So if you break it, it's a trigger to leave 0 profits, or it acts as a re-entry to take a new short. So then what you can do is you can kind of use this as your trigger for re-entry on this. So then you come down to here, you hit a target on the bottom side. If you haven't gotten out of the trade, right, you could maybe see if there's 4-hour levels in here or in here and use those as triggers. So now you can start splitting your triggers into different targets. So you've entered here, right? Create the 4-hour level. You have a take profit target here, right? As your swing or scalp trade, depending on what you want to treat this as. It depends on how fast it moves, right? Like it might go straight down within 1 hour. It might have this big, massive, move like this. And this would be more of a swing trade because these are 4-hour candles. But you could have one of these massive scalp candles, like, something like this, where it just falls straight through the floor, or something like this, where it hits the level and you can see it's developing the 4-hour level here. Like this was a good example. It hits trend, it develops that 4-hour level. If you see that 4-hour level develop, instantly turn it into a swing trade. Immediately turn it into a swing trade. So that's a cool dictation that you can do where you combine triggers, shields, and the creation of time to give you your trade type. So am I going to be in this as a scalp trade? Yes, if it doesn't create the 4-hour. So if this thing had ripped down fast, it would be a scalp trade because it's going to rip down fast and it's going to kind of move back up. If it's lingering around like this and creating a level, it automatically turns itself into a swing trade because it's the candidation for re-entry in the future, which is perfect. So depending on how and which level you come up to here is where you can start to use your trends as trigger points, and you can sit there and dictate whether it's going to be a position or a swing trade, right? So that's really neat. That's the way I like to use trigger points at more of a higher level, is instead of having a trigger where I go like this and I say, oh, okay, well, I have a trend here. Well, that's great. But by the time that triggers out, you've forfeited so much profits, it's stupid. Rather, you can use the level creation, right, as the dictator to what the trade type is. And then if you wanted to, then you could trigger out after hitting targets. Like, for example, this had hit a target from back here. You define your target. Your target was, oh man, going back to this. It was the origin point of the move here. So now you're going back and further into TA. So now you're saying, okay, here was the breakout. I think it was this one right here. I'm pretty sure it was this, because if I remember going back there correctly, yeah, it is. It's the 4-hour. Yeah, it is. It's the 4-hour. It hits, it targets. If you hold this target, you can use a very, very interior trigger to get out of this trade, right? Like if you were to go maybe even the daily, like this would be a spot where you would develop like an extremely quick trade exit. Like, yeah, so then you would go here, and then this one would be piped down even further, right? Like you would go, so then you would go to the 1 hour here, and you could even go like this, right? You could even go, oh, sorry, I missed one here. You could even go like this. And as soon as this breaks, like look at your, like this would be a perfect trigger for that 4-hour creation, because it's moving down fast. It hits the level it needs to hold to move back up. You've created your re-entry to redump this trade in the future, right? And as soon as this breaks, like, look, it ladders off this and stabilizes, right? Like it laddered. We could leave that here. So you have to think of like, okay, what did this move just do? Okay, it hit the origin level, and then it laddered off of what that origin level was hit. So it's not like you broke down below the origin level about to set up the break. No, instead you actually just laddered the move from the attack of the origin level to here. So then you have the perfect time to get out. You have the perfect time to get out. You've broken trend and you've went and laddered off the back test of the level. So yes, it will break in the future, and that's fine, but there's a new entry that's dictated up here, which is just simply the 4-hour hold level, which is very, very straightforward. Like it's literally a 4-hour hold level, and it just continues to hold ladders on this side, and it does the exact same thing as it does down here. So now you use the creation of time to allow you to understand which trigger to use, because you could just draw trends all over the place. You could draw trends here, you draw trends there. It's like, well, how do you scalp? How do you position? How do you swing trade? So now we take trigger points one step forward. Give me a second, guys. My throat's starting to really bother me. Excuse me. Running out of breath here. Cold is a bad one. So now with this in mind, because you don't have multiple triggers in a trade, okay? you have one trigger, and that's this guy here. So this is your like active trigger point. So that's what we're going to do here. We're going to go like active trigger. So this is like an active trigger point. It will be decided what this trigger is based on the time frames up here. Created that 4-hour level, you know that this has to be your active trigger. If you've created this 4-hour level, you know that you're going to go attack it in the future. So you know it becomes a re-entry spot. So the last thing you want to do is create some kind of like, oh, let's see it swing up first. Let's see it swing up first, create this, and then use that as a trigger. You're like 5 steps behind. You're 10 steps behind indicators, and then you're 5 steps behind what an active trigger would be. So you're like 15, 20 steps behind the normal thing. Not literally, but just as, you know, to kind of put into perspective. So then you'd have this, and look how much profits you would have been forfeiting. Rather, you have the creation of what it can attack in the future, right? You have your hourly hold is created here in this moment. This on the top so we can see. That's fine. What happens if you put it left? It's going to snap. Yeah, okay. That's what I thought. Even rewind this back even further. At this point, you have an active trigger. You're just like, okay, accumulation to accumulation. In this moment, you might have something like this and say, oh, I want to see if it swings up. So then how you use this trigger is you're going to decide what the level prior, like this origin level that we had, we have to decide how this reacts before we know where to put our active trigger, right? Because just learning trigger points is learning trigger points. Learning active trigger points is how to use them in the moment. It's just like trends. You have active trends, you have trends. You have trends everywhere, but the active trend is the only one that matters. So in this moment, you don't really have a trigger yet in this trade. You have a target up top that can give you information, right? You would hit target here. So you could say, okay, exit, take my trade profits there. So that would be like one trigger on this trade would be the actual target gets hit. If you want to take this as, say, a swing trade, that's where you would have said, okay, target's hit, I hit target. At this point, now you can say, all right, this stopped the target. Let's see accumulation to accumulation candle. And if this continues to hold, then the move is going to be breaking. So it moves down. You can delete this, right? You still have your trigger in play. This is an active trigger. It could rip straight up and you could exit here, and that's a possibility sometimes. Move still looks like it's breaking down. It hasn't really given us a hard close on this yet, right? Hard close is there, so that sucks. You now have to get over top of this. So now you would have 2 triggers in the trade. Now you have this trend. So this trend is going to tell you whether you break this move, and you have this hold level. So you could do this in one of 2 ways now with your active trigger in place. You could trigger out when you break this level, forfeiting a little bit more profits, like breakout, exit there kind of thing. Or you could see, come on, the next attack of this move. Uh-oh, it just laddered and we broke trend. At this point, that ladder has to be a clear scream to get out of the trade, because you just have to put all your pieces combined to allow this active trigger to tell you what's happening. So you tried to break the move, you couldn't, you hit the origin level. You've laddered off of that. So your next exit is going to be on a smaller time frame, more like range right here. So you're going to have something that protects the range of this move. And I'm just going to do a kind of a trend here to see if we can kind of get close. And I believe it would be something likely in this region right here. I don't think it would quite be this. I think it would be, well, you know what we can do? Very easy. We can just go and find it right there. Something even burn the trade. No, that would be the first part. So you do have this. They do have this telling you what's happening with this trade. So then you can have kind of like your main trigger, which if you were saying this is laddering the move, you would be out. If you really wanted to see where this thing could go, this would be it. And then you'd use your higher time frame hold, and that could trigger you out of the trade. So like it can't be this, right? Because that's already hit. Do you have a 4-hour developed yet? Yeah, you don't have a 4-hour developed. You actually just failed the creation of the 4-hour. Nothing there. There's nothing there. That's tested. That's tested. That's tested. That's tested. your only final and last trigger could possibly be here. So you're kind of working like pseudo regions inside of this larger trigger. And if this holds, then you can adapt this out to a higher time frame. But at this point, it doesn't really look like that's what's happening. So maybe you can hold this 5 minute here, but yeah, everything else is pretty much gone in the move. And it just breaks right over top of it and back holds it, which is like, okay. So then you could use this as your like pseudo trigger to this. So basically this trigger takes ownership over this. So what happens is when this breaks and this is already broken, this is like your final moment to get out. So this is like taking, like it's like a legacy, global, local trends. Think of that in the same way as triggers, like a legacy trigger with a global trigger with a local trigger. So the legacy trigger would have been this, and then it can have like maybe 2 smaller triggers underneath it to protect your entry. So the first one would have been that hold level. This would have been the global trigger, right? So this would be like a global trigger, and this would be like a local trigger. Or I guess this one was created first. So this would be here. I'll mark them so we don't. This would be global because it happened next in sequence, and then this would be like a local trigger. So like once your final local trigger is broken on the move, then this thing is going to break out. So like if you're starting to get over top of this thing, like it's bad, right? 1 second. Sorry, we're just getting medicine for the kids. One moment, kids are here. Okay, we had medicine in the office here. So you can think of triggers in this manifest too, where you have an active trigger, which is the overarching piece. The overarching piece goes and attacks its target. It goes down, ladders off its active piece, telling you your active trigger is breaking, and you have a global and local piece to that, and that's it. So like once you delete all these, you break your local, you break your global. It's just kind of going in the next direction now. You're just one by one going after your targets, and one little by little you're losing all your scoping of this move, right? At this point you don't even have anything left. At this point you would now be in a larger trade, like out to here, right? And then you would just repeat that process. So like if you didn't get out there, you would just repeat that process. So I think that's a really good way to look at trends, as well as they can create triggers, and they have kind of like this branching down of the triggers that they create as well. You could simply be like this to here, which would represent, like this would be gone at that point. This would represent the active trigger in the move, and this would have components moving down. Here, let me save this and refresh my my trading views kind of winked. I don't even know what this is. What happened? Oh boy. Go back to here. This is the 15. So then you have your active trigger in this move, and this is showing you this out to here. Get rid of that one. Get rid of this one. And so then you have your active trigger showing you the attack of this, right? So if you were in trades here, this is your active trigger in the trade, which would then just give you, yeah, like the 4 to 4 is not important here. Too small time frame. The 1 to 1, which would give you local trigger, or sorry, I should say global. So that's active, which is legacy in this case. This is global trigger, right? Then you find the 15-minute here, reverses to there, reverses to there. Creates a 15-minute here. So likely the local trigger. As far as we know right now, the local trigger, hourly, might not be an hourly, it might be a 15. Okay, so that might be 15. Yeah, we just didn't go far enough in the move to see it. That's fine. In this move anyway, it would adapt anyways. And then you have, was it an hourly that we created? Right here, our first hourly, we know 15 though is, but the 15 and the hourly are the same thing there. So that's fine. That's fine. So once this breaks, right, and it's the same thing on the bottom, like the scope of your move is identical on the bottom. You're laddering the move. You've got your active trigger, you've got a global trigger, and you've got a local trigger. Local trigger is going to move down in the move, right? That hourly was already hit. It's going to move down right here. You could even possibly see the 15-minute trail. So you know it's a 15 there, 15 there, 15 there, 15 here, there, got hit. Local trigger to get out of this trigger here. So then you have probably a very straightforward move here. You know that this has to be your next trigger. So if you start closing above this, this is like pretty bad. Yeah, close above it. That can locally trigger you out of the move. I'm assuming it just goes straight up now. Yep, just goes straight up. Makes sense. Goes straight up, breaks that, has one more pullback. And that's a really awesome way to look at trigger points, because it's going to give you spots where you can get out. And then this can define spots below it. Go like this. A lot of this stuff off. We could just delete like a whole bunch. We can do this part of the move now too. The daily, I should really color code these things, shouldn't I? It's a 4-hour. Okay. I meant to color code it and I ended up putting text yellow. So this would be your active trigger for this, which is kind of like a position trade, right? I also have another one here. Rolling this range. I don't think there's anything. No, there can't be anything on the weekly. There's no way. Daily. The way you would treat this is our entry here, right? You're going back and looking at this information from the past back here. There's nothing hit yet as the levels are down here. You'll ladder off the move from down here somewhere. So the only thing you can do is go into the interior scope of this move and find levels off of this candle. Don't think there's going to be anything like even at the 15. No, this thing was fast moving. I think there was like a 3-minute level, if memory serves me. A 3-minute level got hit. Like a 1-minute level, maybe? Yeah, there is here. Or there's the break of that range there. So you've got two spots. You've got the breaking of this range here, and you've got this here. You can put it right there. It's fine. Either one is the test, but okay, fine. Go deeper into the move. The price difference here, 702. Okay, sure, whatever. Okay. Protect the leg of the move. Go white, just a little visual difference here. The replayer tool off. See what it went after so we can understand a higher time frame here. But one after the break of that move. So this is creating an origin level. So we need to find the origin level. That's the first way we look at this trade. Was it here? That's the first thing I ask. Here's a leg of a move here. Did it hit here? I don't think so, right? Indeed, it didn't. Let's go find level it's working off of. So first thing I'm seeing is laddering off the 5-minute. Is there anything on the 3? No, there's nothing on the 3. So I believe this is indeed the 5, right? So this is the 5-minute. This is the break level, and if it's laddering off of that. So good. We have like all the information we need for now. We understand what's going on in the trade. It's laddering off the break of the move. So now we can create, even though I don't know how much I would trust this range trend, we can create this 5 to this right here. So this is the active trigger for anything that represents this in the move. We know it's laddering. So now we know that we're laddering off the leg of the move. That's what we're attempting to do right now. So as long as you hard close over this trend, your trade is good. So that's the very first thing we need to see. Now we need to start kind of designing the architecture now that we have kind of the bottom of the move. And so like I think most people would do this, right? And be like, oh, you know, there it is. And they would miss the fact that there was a break level here. We laddered slightly above it, and you know, we're using just kind of our expertise to understand that that's what you're marking out here. You could have done this, but I think this is hitting the 3-minute level. So indeed you can't use this because this is back testing a 3-minute level. This though I want to do it on the same time frame. So let's go do it on the same time frame. This though is giving you your, come on, dude. This though, the 5-minute time frame where it's laddering off that break level is now giving you your active trend. Now, everything we design off this move can be moved from here forward. So you would have had really good entry on a trade here. If you were trading in this moment, you could have seen that you have the 5-minute break of a move. It doesn't quite hit it down here, so it creates your range trend, which gives you kind of two like perfect entries after. You would just go and target this. Like buying the hold level would be too high. If you were to go and buy this hold level, it would be way too high, and you would bleed, oops, and you would bleed right through it for the simple fact that it has a lower target. I think you'd probably get liquidated on this if you're 100xing, right? Yeah, you would have just gotten liquidated. Oh man, that's the perfect scenario where, on 1 second, drink. So that's the perfect scenario where you say a 100x trader will miss the right information on the trade because they didn't look far enough back to see what was defining the move. And it was simply a ladder point instead of a hold level. So when you're creating a range like this, like what do you think you're going to go after? The ladder point or the hold level? Well, if you go after the hold level, you know that that's creating your trail of moves forward in the future. So then you can just do that same thing where you let something else define it for you. So you have a level here you can go after, you create this 15-minute level, and you could say, oh, cool, we have a 15-minute level, and that can be the moment for the future, right? So instead of trying to buy this 1-minute hold level and create that there, you have to go deeper into the move. So you would have went and tried to buy like that 5-minute hold level here, or you could have had a 1-minute hold level, and the 1-minute hold level is not bad, I suppose. So you could have this right here with this right here. But at that point, you're getting so close to trend, it's like, it's justifiable at least. So that's where like a lot of traders will make those mistakes on hold levels, is they don't understand that there's a range here. And in this scenario, there's only a range because we found the break of the move and saw that it laddered over. So we can create the same time frame range to see, hey, as long as we hold this on the 1 and the 3, we're good. If we start holding it on a 15-minute time frame in the future, then we're going to have like obviously the strengthening of a move because you're moving up in time frames. Now you're breaking that cycle, right? So this would have been kind of that first part of that move where you were like, oh, you know, where's perfect entry? And then, so you would have missed the 1 minute. If you were too greedy, it would have bounced. You would have been like, oh, God damn it. And then you would have bought up here somewhere, hoping that it, you know, creates the hold of the move somewhere on a lower time frame, missing the fact completely that you have the 5-minute range there, right? And then, so if you start creating like a 15-minute hold level here, like this one here, you know the move is good. You know the move is good. Like, you know it's going to continue to move up. So, yeah, this can be the reverse level, and then you can go back down in time frames again to find like the smart entries. This one was hit. This one was hit. It's not, you can't use a 5 minutes. You can't even use a 15-minute here. So you'd have to go deeper in the range. You'd actually have to use the 3-minute reverse, which is here, already hit perfectly, 3-minute level. So then you could enter here in the future, or is that hit? God damn it, that's hit. So you can't even enter there. So actually you're just back down to trend again because there's no untested holds here. Maybe there's a 1 minute, maybe. So you could either be here or trend. That's like all you have. That's all you have. This 1 minute is not a reverse either because it gets tested there pretty perfectly. So then you have this again, and this would be like where people are entering the trade. And if you create that 15-minute hold double, now you have a 5-minute range that's tested to, or sorry, created, back tested to hold the move. So now you're showing the move that you're strengthening the move. And so that's where that tries to go and test that, but then has to hold that trend again, right? So it's first and foremost, when you're designing these triggers, accuracy is obviously like critical. And you can see, here we go. Let's mark this active trend. Active trigger, sorry, oops. Active trigger in the move. Now you can build architecture moving forward that allows you to say, okay, well, where's the actual trigger points on this trade, right? So now you've got the perfect entry, which is showing you and giving you, because that's a key part of making triggers, is making sure you understand what information is being used and created. So it would be critical here to know the difference between, hey, the trigger is on a hold level versus, hey, the trigger is on a range trend, which is the final range of the move prior to hitting the next reverse level down, which is a complete collapse of the move, by the way. So that's also important to know. How we use triggers is going to be dictated based on what is creating the first active trigger, right? So this is like the range trend or the active trigger. And just start marking some stuff here. That was this trend, right? So let's just start up, high time frame down. Then we have the 4-hour trend. So let's do that. This would be the global trigger because it is in existence. So you have a global trigger here. Global trigger. So it can be created here, and now we can work with it. Now we can go and see if it's starting to hard close. You've got a global trigger. Let's just confirm that's distribution to distribution. It is. Yeah, we're good there. We never want to work down, or sorry, up. So we're just going down here and just making sure that we don't have any kind of other information that's piercing through this and giving you other information. Now we need to start looking at here at active triggers that can go after the global trigger or global level. Just go back to the hourly. Now we need to create the hold level there. 15. Hold level is being created here. So now you can kind of move to this right here as the part of the move. That could, for now, be the local trigger. You'd need a target up top. We're not worrying about targets right now. Oh, what am I saying? It hasn't hard closed yet. Okay, so we weren't there yet. It didn't hard close. But in that moment, it could have created the candidation for it. Okay, that's fine. Actually, it just goes after our global trigger, which is perfect. So now we have, yeah, that's actually perfect. Because so now when we run this move, that was my mistake. It's being sick. I think everybody saw it too at the same time. I was like, what's Cotton doing? It wasn't anything yet. You have to create it first. It's not created yet. This does not create it. So we all know that. You have your global trigger here on the move, gets hit. Now, if you create this can be the level, which could be a local trigger. Okay, good. You've created it. Let's go high time frame down. Make sure we have nothing else that we're missing. High time frame down, nothing else. Local trigger. Perfect. Which could also be local. Oh, Jesus. Triggers inside of triggers inside of triggers is the point I'm trying to drive home here. Have anything else here? 5 minute to 5 minute. You have this, which is likely going to fray down. Bottom of the move here is going to be here, which is the same thing. So then you're going to start your base point right there. Go here like this. So then this is your next trigger here. Right there. So that would have been like your scalp trigger, right? You break over your level and then you could say, okay, trigger out. And if you hold that break level, obviously you're still in the trade. So then you would just be like this right here. So then this is your new local trigger. So this is gone. That's just the level that it's going after. This becomes your local trigger, right? The scenario where you would have, here, let's talk about that. The scenario where you would have used this as a local trigger would have been here like this. It would have been like this. Where's that origin point? Looks like it's right kind of back here. Like this is like whatever origin point, right? Holding your move, break over top of the origin. Now you need to see what it can hold. So this is the backside valley, right? So at this point, your trigger would adjust, right? Your trigger would adjust to being like, okay, see if we can move this move up or down. So now you have a choice because this becomes now being developed as a swing trade, right? So now this is saying like, okay, this trigger, which was local, I have this one saying local. No, this is a local level. I forgot to remove the trigger. So this is your local breakout moment, and this is your local trigger. Now that you've broken over this level, you can have your trigger redefined instead of it just being like, oh, you know, here's the local trigger, let's get out. Well, yes, that was correct in this moment, right? Like in this moment when you have, you know, your 3 to 3 minute candles here, your local trigger that'll go back down and attack the lower range again. In that moment, it's correct. But now your trigger changes. So your triggers, they act as a hierarchy, and the hierarchy will change as the move changes. Like if you were to have, and I believe this origin level is actually even lower. It looks like I'm just going to snap it to this for ease of use, but it looks like this attacks some kind of, oh no, it's a 1 minute level. No, it can't be. So, okay, sorry, we're on the smallest time frame. So it actually is this indeed. This is perfect. But when you break over this, you know this is no longer your trigger point, right? Your trigger point becomes the valley it needs to hold, right? So then you've got a backside here. So like your trigger points, they evolve, right? This becomes your new like local trigger, or see if there's anything else here. that dictates an even better spot. Yeah, I like this. I like this 5-minute backside as a local. If it holds that, then the move is going up. And okay, yeah, it's also the 15, so that's perfect. Now, instead of this being your local trigger is now like here. And as long as you don't hard close underneath it. So now you can go and you can, wait, originally we would have had this and we moved it to the 3-minute, which was this. And now we can go back down in time frames to see where this settles, or you could use your range trend, which would be here to here, right? Like those two. 1 minute's a little too premature. Now your trigger becomes this level here. So this is now your new local trigger. So you see how a trigger has hierarchy and it evolves. That's your local trigger point, right? Now you have a trend because now you're holding this move. Now you can go back and say, okay, well, where's my trigger? Okay, we're still here. This is still good. Maybe you have more of a range now that's representing what can hold. So it would be here, here, right? So now maybe you have your trigger here and a trend there. This thing can continue to hold up, which it does, right? So you can see how this trigger, like I think people think of triggers too often. Hold on a second, I need to drink. My throat's starting to kill me. Give me 1 second, guys and gals. So I think people can see now how a local trigger redefines based on the events in the moment. And it's using this is where we can say this is a swing trade. This is a, oh, sorry, I should say scalp first. This is a scalp trade. This is a swing trade. This is a position trade. Because what your trigger is, like people use trends as triggers, which is technically correct. The trend is a type of trigger. But realizing there's many more triggers than just trends. And you have ultimately a local trigger, a global trigger, and then an active trigger. I don't like to call it a legacy trigger because it's just kind of like it's the active trigger representing the entire range. And then there's a global component to the move, which is a global trigger, which will tell you if the move can stabilize or not. And then you have a local trigger, which is telling you what part of that move is in succession. And that local trigger is what adapts and changes in the moment. So like a local trigger would be a swing trade. A global trigger would be a position trade. And if the global trigger starts to break, that's when it starts to get into the realm of the position trade breaking its move, right? So this is cool. Like I said earlier, it's really cool when you can start to take your trigger points, which is your trends, which is your active trigger, which is controlling everything underneath it, the ownership of the pieces that have underneath it. And your local trigger adapts based on what your active triggers showed you. Again, for this move, we had to understand that this was a 5-minute leg of a move being hit from back here. From way back here, there was a 5-minute leg, which means it's creating a range. This is the very first step in this trade, in designing these trigger points. 5-minute level, leg of a move, whatever it is. Yeah, the leg of the move is right there. 5-minute leg of the move. Ladder is above that, which means it's trying to create a range. Oh my God, my trading view is dying on me. Let me refresh it again because I'm rendering videos and stuff. I don't ever truly get a real break. I say I'm taking a break, but then I just go and render and do more work. So this scopes back to this active trigger point here, which is the range that gets created off the ladder points. And then you start laddering those points there. So like you've laddered from here to here, creating a global 4-hour trigger or a global trend, which gives you your local piece of the move, which then your local, oh my God, this thing moved up like crazy after. Oh, I didn't even realize that. Jesus, not expecting that. So your local trigger, it's changing, right? Like your local trigger changes between trends and levels, dependent on what the global pieces of the move are telling you. So that's a really, really like strong eye-opening part of the charts is when you can use your trigger points, like your local trigger adjusts and changes based on if it's hitting an origin level, if it's going and back attacking, ranges, creating a range. Again, just follow the logic, right? Break of a move. It's the only time frame left. It's going to break the move. Therefore, it makes for perfect entry if you ladder straight above it. which it did. It just laddered slightly above it. It created its trend on the 5, ladders off those 5-minute levels. So we have a 5-minute to 5-minute trend because it was a 5-minute leg. So all it can do is create a 5-minute trend. You can't have a 5-minute base point, go up and pin it to an hourly reach point. That's not possible. It has to be 5 or less, right? So you do have the 5 to 5 there, which gives you your ladder point in the future. You just rewind back to this part of the move. Right? You do have your 5 to 5, which gives you your ladder point in the future, which is your active trigger, which makes a global trigger. So imagine this is a legacy part of the move, and it has to create then a global, like it has to create its next phase, whether it's 15 hourly, it'll create it. But then in this case, it just ends up also being the 4-hour because it had enough time. But, you know, in the moments that you're actually trading it, like it would first probably look like it was an hourly. You know, that doesn't really work because you don't have any 2 distribution candles that are, you know, hourly to hourly, and then it could be a 15. That doesn't really work either because you'd have this to this, which doesn't really work. Do you have a 5-minute maybe? So you'd have this to this in the 5-minute. In that moment, you'd have like this to this. Have this to, come on, dude. You'd have this to this, which is the same thing as the 4-hour trend. The 4-hour trend just gets redefined a little bit for accuracy in the future. So you have that. Here to take this away, take this away. You don't ever hard close this, right? So then you have your active and global trigger in the moment. So now you have your active trends in the moment, because in this moment, there's no 4-hour, but there is another 5 to 5. There is another 5 to 5 here. So you do have it. You do definitely have it. And then just as time goes on, I don't know, was it the 4-hour already created here? No. You have to let this thing come back down again before you can use that 4 to 4. Or did you? Actually, you might have had the 4 to 4 already there. Let me go check that again. It's created here. No 15. That's your 5-minute right there. Was this actually created a 4 to 4 in that moment? It did. It did. See? It does. So you already have you have it there in that moment. That 5-minute candle must have been pretty close to a 4-hour close. So anyways, then you have it. It's right there. Then you have your next trigger on your move on the 4. And it's cool because then they allow you to understand where your local triggers can be. They allow you to understand how you can create a local trigger to a move to see if you're breaking up or down. So your local trigger is always adapting based on what is hit in the moment, just like it adapted here as we justified it in that moment, and how it's created back here, and the information it has to hold and continue to hold, right? Because prior to this even being retested, you had your 4-hour trend. You already had your 4-hour trend here. Yep. And it's well into its move. So now you could have a hold level that you don't hard close under. So now you could go and try to find like a hold level that you don't hard close under. Can't be that, can't be that. That's way too diminished down. So you'd have this right here as a reverse. That's the first thing you could mark, right? Yeah, this is kind of already hit. Then you'd be here, which is already hit. So then you'd actually be lower in the move. One minute down here. That's hit. So your 1 minute would be right there. This could be a reverse, but I don't like it. I just like trend. I just like trend at this point. And that's where you're going to get like a lot of traders making that mistake. They try to buy 1 minute hold levels, and that's good, but you're going to likely see this go down after trend and not hard close trend again, right? Yeah, like right there. What do? Exit the trade? So what do? Exit the trade because you just hard closed, but you still have 2 levels underneath you. You just exited the trade and it's about to boost up. Instead, why don't you just take the ladder point, right? And as long as you're laddering above this, then you can start measuring things. Then you can start saying like, okay, 10, that's not liquidation. So technically you could take this level. You thought this whole thing was going to hold, technically you could take this level. You could also just take this trend right here, because I think if this is the creation of the 4-hour, I think you're going to go down, and as long as you ladder the move, you're good. So you could say ladder this, which is that trend, that's pretty perfect. And then how much lower could it go? Oh, another 30% lower. Well, can't, because you have to ladder the move somewhere, and there's the break of the level. So maybe you ladder slightly above the break. I think that's pointless for 10%. I think you're either halfway through the candle here at 20%. Like I think you're either right here or you're at this trend. You're picking between those. In between doesn't make sense. If this was like 60%, then sure, in between makes sense. But at 30%, it just doesn't make sense. So then your move is like this, and you're somewhere between these two. Rebuying trend here, go to the 5 minute. Or picking some point that's just like kind of floating right above it. Because it all represents the same thing when you're a leverage trader. It's all representing the same thing. It's trend here is the right play. Like I said, a trend or slightly above this. Even if you were to buy this level, the whole thing is going to break. You're going to get liquidated. You're going to get liquidated here. You're going to get liquidated here. You're going to get liquidated here if this stuff doesn't hold. So it doesn't matter. You could have even bought this trend right here and you would have been fine. Personally, I would buy the lower trend because it's showing you like, okay, active trigger, ladder, hit that. And it's just a little bit of a better entry. And then you also have the 4 to 4. Expect it to just do something where it just dives a little bit deeper to see if it can hold the level, because it will try to break the level. You get an extra 12%. Yeah, that's good. That's good enough. And then the move just moves up, right? And then that's giving you your dictation of what you need to do in here, which is your 1 minute level here. If you can't break out of this, if you can't break over top of this, then you need to get out of the trade. If you break over top of that trade, you have to change your trigger point because it's breaking out of the origin level. Your trigger point now changes to like whatever trend you want to justify. Even just mark these two just as like a kind of a very, very ignorant dummy trend. Just mark these two, just like the bottom to the bottom. And then at least you have like if this is continuing to hold. Let's move it back. Move it back to here. Then this is your local trigger, because if you lose this, you're losing the move. You come out to here, something like this, you lose that, that's your trigger. This isn't going to hold. Or if you lose this, that's your trigger. This isn't going to hold. But that local trigger then changes, because before it was pretty steep. It was the 3 minute trend. So you could look at this as two triggers, right? Or is that a 5? I believe it was a 5 minute. Could have been the 3 minute. Let's check. I feel like it was a 3 minute. I feel like I'm going slightly crazy. Maybe just because I'm sick. 3 to 3, which gives you this to that. So then your base point would just be here to here. Yes, it was a 3. So then your trigger point becomes 2 different trigger points, two local trigger points. Enter. Let's go left. Right, 2 local triggers. If you break this trend, it's gone. Get out of the move. If you break over top of this trigger point, we'll just go local trigger. In this moment, this trigger doesn't exist. Can't go forward. Oh, stupid trading view. In this moment, that trigger doesn't exist. Second, it gets over top of that level right here and hard closes. Yeah, I mean, it's already all over top of the level holding it. You could wait for the hard close. You're still in this local trigger. All of a sudden, your local trigger adapts to here. Like this is now your local trigger, right? And so be it. There's the way in which we can smarter work with triggers. I'm going to take a few minutes of a break here. My throat's starting to get really scratchy. I'm going to go for a walk. Any questions in chat, go ahead and ask. But I think this is like a way that people wouldn't have looked at trigger points before. It's going to be very eye-opening and helpful for people who are trying to scalp trade, is to define the types of triggers and realize that local triggers adapt based on the higher part of the move. Okay, a 5 minute break for me. I'll put music on. You guys go ahead and ask questions. Okay, I'm back. What time frame a 4 hour can be adapted? Only time frames below it. Yep, you can be 4 hour, 1 hour, 15. You can only go down and you can never go up. Now I better understood what mistakes I made in yesterday's trade. Such a steep trend to get out. Yeah, because it's a scalp, right? It's the definition between it being a scalp or a swing trade triple. So you have to use your trigger points to define what the trade type is. You don't have to, but it's a smart thing to do. So like if you're in a scalp trade, it's also kind of the defining factor if something is going to fail or not. Like if you were to rewind this back into this move, say you're using this 3 to 3 minute here, right? Like this, say you're using this 3 to 3 minute, this is going to be, and then you would have your like your 1 minute origin level here, right? 1 minute origin here. This was the move. This trigger would be the defining factor if this is just a scalp trade for you, or if you're turning it into a swing trade. So if this trigger gets released, that's simply just a scalp trade. You exit with your profits. Like if it was to break down right now, and you entered maybe right here, maybe you're in the trade from here or back here. Let's just say even you entered the trade right here, right? You lose this trade, you can assume that you'd get out around here, and you're still locking up, you know, 30-40% profits here, somewhere between 30 and 40, depending on how you exited and if it comes back, because it could like break down, come back up to here, and then, you know, you could be in around the 50% mark if you were entering down here. You're still locking up 50% profits. So like the trigger point defines the trade type. That's the key thing here, right? Like your trigger point defines the trade type. And like if you move forward in this now, same thing would be here. If you were in this move right now and it broke right here, you would just lock up that 50% profits, because it's just telling you that the move is degrading further, right? There's your target gets hit. If you hard close your trigger, you should just get out of the trade. You don't. Instead, you actually break over top of your origin point, making this your trigger, because now you know that it has to hold this. So now you know that if it holds this move, I'm just going to say LT, local trigger, Litecoin, LT, just add a C. Now you know that if it holds that, like now this is your trigger point instead of this. So before it going above this, it was just a scalp. Now it's trying to turn a scalp into a swing, right? You're still in a scalp trade because it's still your local trigger, but now you're holding the move, right? Now all of a sudden you're holding the move, and your local trigger is now telling you like, okay, this is no longer a scalp. It's actually moving into swing trade territory. Right? Because now your local trigger becomes this. So it's like one of the key takeaways here. There's two key takeaways. Is what turns a swing into a, geez, I always do that. Why do I say swing first? What turns a scalp into a swing is your local triggers, right? And then what turns a swing into a position would obviously be global and active legacy triggers, right? Like that would be your bigger triggers up here, which we saw in the last trade, which we can go back and take a look at, I suppose. But that's how you can define like when it's smart to get out of a swing and just call a trade a swing. You imagine blindly entering the trade right here. You picked a random number. Now you have to have some kind of criteria to say, okay, am I going to stay in this long term or not? Local triggers will tell you if you're going to stay in it long term or not. Very obvious too, right? Like just like we found the 5-minute range trend from back here. Like just get rid of this one. Just like we found the 5-minute range trend from back here. You have the local triggers here, and they tell you what's happening in the larger scape of the move. In the larger scale of the move, they tell you what's happening. Right? So just only work time frames down. That's the other point to this, just time frames down. If you're using a 3-minute, if you're using like a 3-minute trend, if that's what you have on your chart, use your 1-minute levels, right? Or use like a 1-minute trend. You can only use time frame down, which is what you have here. 3-minute or 1-minute level, 3-minute trend. You can only go time frame down. Break over top of that. Confirm the hard close on the 3-minute, right? Yeah, you won't have anything yet. Confirm the hard close on the 3-minute. Wonder if you create a 5-minute, any 5-minute criteria. Yep, create a 5-minute hold level above your local trigger, which closed on the time frame above it, which is the 3-minute. Never closes below, continues to hold. Bang, move breaks up. How do you use bottom side of the trend when it comes to triggers? Or do you use them for this? From what I've seen, they can sometimes be strong bound points. For short. I'd have to see an example what you're talking about, Crackle. The bottom side of a trend? What do you mean when you say the bottom side? You mean the back side? The back of it? Because the bottom can be different things. The bottom on a distribution trend is resistance, and the bottom on a... Okay, so you mean backside. Yeah, I don't use backside trends. Backside trends are very rarely used. They're late points of a trade. Typically, a backside trend would be like confirming a larger time frame dump. That's all it would be. Like if you have a trend like this, for example, if you have a trend like this, and you're like, oh, backside of a trend, it's holding, it's holding. This is probably just trying to close, like, what are we on the 3 minutes? It's probably just trying to close like a 15 or an hourly. It's just you're missing like a higher time frame hard close. That's all. You're just missing the higher time frame hard close, and you're missing up the setting of hold levels on time frames in between. So like if that was a scenario and we were saying, oh, we just broke the 3 minute trend like this. We just broke the 3 minute trend and it's like this and it's holding the backside of this. What you're probably missing is not only the larger time frame is closing, like maybe this is like the 1 hour is closing, hard closing, but you're also missing the hold levels that you're developing, like 5 minute hold levels, 15 minute hold levels. There's two things you'd be missing by doing backside of trend, is that you would be missing the higher time frame closes and the intermediate, so the in between hold levels. So you're missing the hard closes and the hold levels on different time frames. Hard closes higher time frame, hold levels in between time frames, in between the trend and the actual higher close. So again, if this was like an hourly trend, then this would be maybe like the 4 hour or the daily, and this would be like hourly hold levels, or a 4 hour hold level, and this would be like the daily close. So you're just missing, you see what I mean? Like you're just missing the oh, it's hard to continue talking, running out of breath so much today. You're missing the in-between pieces, between what created that trend, the higher time frame it's hard closing, and then the even higher, like the higher hold levels it's creating. Okay, let me try to explain that differently. Say this is a 1 hour hard close up here. This is like a 1 hour trend. Like it goes up like this, test back here, creates like a 1 minute hold, continues to hold, creates like a 3 minute hold, goes back, tests it again, goes up here, creates like a 5 or a 15 minute hold. All of a sudden, you hit a 1 minute hold down here or a 3 minute hold, and then you go up here, and all of a sudden you have a 15 minute hold that developed here, and this is like an hourly, and then you continue to hold this like this, right? Even if you're asking, all of a sudden now you've closed the hourly because you created 15 minute holds. But that's what I mean when I said intermediate, like the in-between levels could be like starting with a 1 minute, like a 1 minute level test it, creates a 1 minute hold, that 1 minute hold hits, that 1 minute hold holds, does this, creates a 3 minute hold here, that holds, and then it's like building up time frames in order to hard close this larger one. Does that make sense? Hopefully that does. I'm pretty sick right now, so my brain is working a little foggy right now. I can only go down in time frames. Create a hold level. This is the 3 minute. I can't go to 5. I can only go to 1. Create it on the 15 minute. Can only go down to 5 minute points and 3 minute points. Can't go up. Can't adjust time frame up. Only down. Create something on a 15 to 15. Only use the 5 minute to adapt. JP, that's how you do it. You never adapt things up in time frames. So just make a rule for yourself. Never move up in time frames and you'll be fine. Never go and move your time frame up. So for example, this is a 4 to 4 hour trend here. I could never go up and adjust it. I can never go up and adjust it. Everything in trading decycles, not up cycles. Upcycling would break the theory of trading. Everything goes down in time frames. So if I create this on the 4, the only thing I can do is look for time frames down. If I created this on the 4, tell you what, do this. If I create that on the 4, that's what it should look like. Oh, wait a second, we don't have any time frames higher. That's exactly what it should be. If I've created this on the 4, there you go. That's the only thing you can do. So imagine it's like that. Think of it in that way. If it helps, you could actually do that too. You could just go and create a trend and then just remove your time frames above it, and then you'll never make a mistake. In theory, if you had like an auto programmer where you create that trend, whatever time frame you're on, you could only work down from. Even right now on the 4-hour time frame, I should actually not even click these buttons. Be done shortly, everyone. No need to watch the videos today. Today's just going to be purely on triggers. Also because I'm sick and I need rest. I'm slowly dying, but I definitely did not want to miss mentorship. Rain or shine, I'm here unless it's like surgery. But anyways, I think that's a really good outlook on trend trigger, like the follow up to triggers and how we have to like start thinking about them. Do a few more questions and then we'll wrap up today's session. Like I said, it'll be a short one, but just pure information, no videos today. So I don't really think we lost any time. I just don't think there's a need to watch 39 and 40 when we're going to work with them in a more advanced way anyways, because the way I work with them in 39 and 40 is a lot less advanced than this. I think it's a lot more about, I don't know the term, just like more lower level of education, lower, yeah, there you go. Just a lower level. It's something that like we're moving past, we're already past that and beyond what you learn in 39 and 40 with what we talked about today. You can array them all the way down to 1 minute if you want, Hugo. Meta changing events are typically legacy. You know, so that's perfect. Okay, good. I'm glad that cleared it up for you, JP. Yeah, I'm glad that cleared it up for you. Meta changing events are only time frame down. Oh, sorry, Jesus, what am I talking about? Meta changing events are only the highest events, like your legacy components. Yeah, only legacy components. But I think when, you know, right now we're at trade management. So let's talk about that for a minute. Right now we're at trade management in our trading. I think people are well versed and are getting great entries. The thing that I'm seeing people struggling with right now is like how to exit a trade, how to lock up the most profits. Like people get great entries and then the rest is kind of just like a coin flip. Like people are getting amazing entries, always getting these great levels. I've taught them how to get these amazing levels and all these things like that. So that's great. But everything else seems to be kind of a coin flip. Like picking perfect entries and like it's always profits, which is great. Like it's great. You're like a lot of people are just doing nothing but profiting right now. So that's great. But we really have to start working on like how to extrapolate more profits, how to be in better trades. It also just reduces risk because you make more money and then the bankroll grows even faster. So, you know, when you're talking about trigger points, what we're doing right now is trade management. So I need everybody to keep that in their mind, that trigger points is trade management. So when you're marking this stuff out, you have to be in the mindset of managing the trade and starting to look at the deeper information. Like this here was like a 5-minute leg of a move. It was the ladder point had created the 5-minute range trend. It gave you the local component, right? Like this was the higher like active trigger or legacy to this range. Like it's legacy to this range. It's not legacy to anything else but this range. But it becomes the active trigger for the current range you're in, which is something kind of like this. Here, let me save this and refresh my Trading Views blogged again. So it becomes the active trigger for what's inside of this. So it's not a legacy component. It's just an active local component, but that has even more localized, but it's global to, you know, this trend right here, like this range of the move right here to try to see if it can break over. So if you were to be able to see that this is a 5-minute to 5-minute range, you'd have your perfect entries and that's great. But now you have to work on trade management. People are getting perfect entries all the time, all over the place. It's just like amazing how much like good entries, but the thing is like people are just coin flipping their profits after that. People are just coin flipping. Sometimes they can make, you know, 1%, sometimes they're making 2% and they make 2%, they could have made 6 or 7. Sometimes they make 0.4% and they could have made 1.8%. Like there's just, I truly think right now people are coin flipping their profits, not in a bad way. Like it takes a lot to learn this stuff, but I think by creating trade management criteria, like what we're doing with trigger points, is the exact way you do that, because it allows you to see when you cannot get out of the trade. It'll tell you when a trade is breaking. Like again, in this moment here, like it was very straightforward. You have your controlling piece of the move, which is your active trend, and then you just go to the replayer tool. And you have your local trigger point, which is this. So again, if you fail to hit this move, you can get out of the trade. If you break this trend before breaking above that, you can get out of the trade. Like you have two triggers here, right? We'll put another LT here for local trigger. You know that if you get above this, it's going to be your local trigger. You know if you break below this, it's going to be your local trigger. This will delete once you get over top of that. So very, very straightforward and simple. Now all of a sudden, you know exactly when to exit your trade. Now you've defined between failure and succession, right? Got the hold level here. Hit the hold level. There's nothing left in the chart to hit the breakout. You have your local trigger. You're in this move. Breaks over top of it. This is gone. Deleted. You have a new local trigger. Okay? You should stay in this move now. You know that it's no longer a scalp. If it had not reached this above this, or if it had broken this trend, you trigger out. You know that you captured like 80% of the profits. A scalp trade is now no longer a scalp trade, it's a swing trade. All your scalp trades existed like in the range before that. Your scalp trades existed when you hit whatever little inverse level you hit here, like this inverse level here. This is a scalp trade down to target. You know, taking whatever other trades you can justify backside here, you know, as a re-entry after you hit your, like, okay, look here, create an origin level. Bang, perfect. We know we hit this, we create an origin level. So where would your next entry be? Well, your next entry would be right here. Oh, oops, no, right here. Reverse level that represents the interior range. This is creating an origin level, so you know it's a breakout point for the future. Very straightforward. So you could re-enter here, do another scalp trade. Right there, you're in this trade. Now you could just go like this. Trigger out like that. Where's your target? Origin level. Fails to hit it, you should be triggering out of this trade. You just laddered off the origin. You should just get out of the move. Or you could wait till the trend breaks, but you're going to forfeit a bit of profits. Now you know that this is an origin in the future. So now you know this is going to be your local trigger in the future. So this LT just now exists in this moment for future moments. Yeah, and you should just be out of the trade because you failed to go over top of it, right? So you're just creating an origin level for the future. Where's your next entry? Well, it would be on trend down here, right? Like you're going to ladder this. This doesn't exist yet. You've got the 4-hour information. That's fine for the future, but right now we wouldn't really use it. There's levels below it, and you know your next trade. Oh, look, there's even a good scalp there. If you could have scalped there, and what would be your trigger, right? Your trigger would be like this. If you did go the 4, if you like that 4, triggers this. Protect capital. Oh, look at that. Another perfect scalp trade. You hit the 4. You chose the 4. I said I would do this. I missed this one, but maybe you guys got into that one. It's laddering the move again. Where's your next trigger? Local trigger would be here to here, right? Get out of the trade. The origin, it's still laddering down. Oh, it moved up. Okay, wait a second. Oh shit, it's holding our trigger. There's no point to get out yet. It actually didn't break down. It moved up. Oh, sweet. Now we can just delete this. Our local trigger is here. Okay, this is no longer a scalp anymore. Now we're thinking about a swing trade if this holds the move. Now you're thinking about a swing trade. If this can hold, we're now in a swing trade. Okay, we're holding. 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 Did we create the 5 yet? We did. We create the 5, we rock it over it. All of a sudden you're in a swing trade. See what I mean about like local triggers will define the trade that you're in. That's how you work with your trends. And that's how you stop coin flipping and start taking control of your trades. This is like trade management. The best lesson I could give you guys on trade management is like trigger points, active trigger points. But they all start from understanding where the correct architecture is. The correct architecture in this move is very straightforward. There is no other time frame. Like we walk through it. This is it. There's nothing here. Like this is the leg of a move. So if it ladders off of this, like you've got 2 candles. This is like about as straightforward as it gets. What would be the greediest part of this move? Is there a 3-minute? No, that's the bottom move. That's laddering the higher piece. Can't be the 3-minute. Is there a 3-minute hold level? Yes, it's already hit. Can't use that. Is there a 1-minute? Nope, 1 minute of the leg exists here. So you're just hitting a reverse level. Is there a 5-minute? Is there a 15-minute? So actually also the 15-minute leg, which is pretty good. So yeah, 5-minute, 15-minute. Might have been the 15. I don't think it's that hourly. Can't be. Yeah, it could even be the 15 here, right? So we actually missed that because you see, even I still make mistakes when I'm teaching sometimes because I'm working from time frames up. That's why you have to always go down to get better accuracy. It doesn't change the architecture of the move though. Like if you were to go here, you can only use time frame down. It gives you the exact same point. It gives you the same point. Or if it didn't, you would time frame down it to 5. If the point wasn't in existence at all, you would time frame it down to 5. The only thing that this means is that you can use an active 15-minute now from this point. So the only thing that changed by understanding it's a 15 instead of a 5 is that we can use like a 15 to a 15 point, which doesn't exist anyways. It's the 4 to 4 that gets created, or the continued creation of this, because this never breaks. So nothing changes with the move. We just simply made a bit of a boo-boo on the time frame, because I went time frame up. You see, this is why we never go time frame up, because we make those mistakes. Always work down in time frames, because then there's no questions left over. Manipulating scalps are easier than swings. Well, scalps are very visceral and instant. Like you can see when they're failing, you have a local trigger that shows you what moves are trying to be attacked. You have a local trigger. It's very visceral. When it breaks, you get out and it's like scalp trade done. But then your local triggers can also give you what turns this into a scalp trade. And here it was very straightforward. You would turn this into a scalp trade once your local trigger is broken and created, right? Like it's very simple. This the origin level is the point that can hold the move for breakout in the future. We've talked about this in the past. Create an origin level that creates breakout. If it holds that level over time, right, you're just going to break out of the move, and it does. And then even here, if you were wanting to say, like, you could take it one step further and you could go like this and say, okay, I'm still in this here. Okay, like I'm still in this here like this. I believe it was right here is the 3 minute. You could take this one step further, okay? And you could do this. 3 to 3, if this hard closes and breaks, even on the 1 minute, you could say, I want to get out. So you don't have a swing candle up yet. So if you were to go to this moment here, right? You could say, where do I want this move to swing to get out of this trade? So then you could create like a reverse trigger off of move failure, which would be like this. So instead of, because this would already be gone and deleted, your local trigger is now this. If this trend continues to follow, then you know you can use this as your origin. What was a breakout could be failing a larger time frame. Like it could be just like failing to close the 5 minute, which it doesn't need to, by the way. Close the 5 minute. That's not relevant here for this move because it was created on the 1, so we only really need to close the 3 on it, which happens right there. But then you could take it one step further and say, okay, if I continue to like follow this trend and go below this, the local trigger, the origin point has failed. So then you could do like a reverse trigger, which is going to show you when to get out of the trade based on breakout. And like right here, it's like starting to break out. So if this started to go down, you could get out even higher, saying that this local trigger is going to fail because actually it created a trend. That trend is holding the move down, and it's just actually creating a larger time frame, like failure hard close kind of thing. It doesn't. It breaks it right there, and then it breaks out. Hard close that local piece, and then it just has pure breakout, right? And that's just straight up from here. But it should be pretty obvious why. Origin level, holding the move, local trend showing you even like a reverse trigger point would be like, oh, that again, if this holds the move, it's going to fail the creation of this. Like it's going to fail the hold of this on a larger time frame, which would be dictated by this trend. So then you could even take it one step further with your trigger point if you really wanted to have like maximum security. Like if I was trading millions of dollars per trade for a hedge fund, that's how I would do it. So manipulating scalps are definitely more easy because they're very visceral and instant, and there's no big losses with scalps. But yeah, mastering trigger points is like, this is trade management 101. Couldn't agree more. I find myself flipping all the time. Yep. This is how you do it. This is how you do it. You start working on the trigger point criteria. You start understanding how a swing trade gets created. You start understanding where a scalp can turn into a swing. Right? This is the moment that your scalp trade could have turned into the swing trade. And it's so obvious. It's just like so blaringly obvious. Origin point holds it back. Move just stabilized, range created on the bottom. It just laddered over top of the break level of the move, creating the range. And that continues to ladder, continues to hold, and then you break out of your origin level that was holding you down after laddering up. So it's just like, it's if you were to put it on paper and you'd be like putting check marks, like an ignition checklist for like takeoff for a space shuttle, this would have just like checked all the boxes for breakout. Like this is like literally checking every single box. Box number 1 would be like, laddered its move. Yeah, laddered way the hell back here. Like let's create a checklist here. Not like one that we'll use going forward, not like that, but let's just create like how many points or how many vetoes did it get? Yes. Okay. Stay above this. That's 1. So let's do this. This is 1 point above. Yes. Create a ladder point. That's where You stay above this, that's 1. Create a ladder point, that's 2. Reladder that ladder point, that's 3. Create an origin level, that's 4. Hold the levels below, that's 5. Hold your trend, that's 6. Break out over top of the origin level, holding you down after you've laddered, that's 7. Break past that. Continue to hold the move, I guess, would be 8. Like, look at how many things went bad in this trade. Nothing. It's like you could say like 7 positive vetoes or 7 check boxes. It's like, oh, here's your ignition list, right? Like here's a list of things that you have to do to create ignition in a move. Like it had 7 pluses and 0 negatives. Like, of course this thing's breaking up. So you could even just like think of it in that way, right? Like it's just, the trick is finding like, oh, what's this? And where are these ladder points? And it's trade management, and it starts with understanding the correct architecture. But then you can see like, okay, well, like all these things happen. This is all yes. Can this turn into a swing trade? Yes. Could it turn into a swing trade here? No, because it's creating, no, it can't, because it's creating the origin of a move. Or it's creating, it's failing to break out of its break level, which could create an origin for the future. So that's one thing in the category of, can it be a swing trade? No. Second thing, ladders off the move? No. Third thing would be, if this holds it back, did that hold it back? No, that didn't hold it back actually. So that just creates your 6 for moving up long term, right? Instead of having like 1, 2, 3, you have to keep moving down and build number 4 and 5, like the continuous points of failure. All of a sudden number 3 failed, because it was like, okay, well, you could even say this is number 3 if you want. So fine, 1, 2, 3. And then once you hard close over that, like 1, 2, 3, once you hard close over that, it's gone anyways. So that's all gone. And then you create your number 6 or 7 up here when you break over top of that. So like it's trade management. That's why scalping is so easy, because it's like you can very easily see where moves are failing and succeeding. But again, it all starts from the correct development of the architecture from stage 1. Like technical analysis has to be first. You have to mark your technicals properly, or everything else is going to be boinked. Like if you didn't mark this 15-minute level and create this range, you would just be in no man's land. Everything would be fucked, because you wouldn't be able to see anything at all. Nothing would make sense on the chart. You'd be like, man, I'm really bad at technical analysis. Well, you didn't mark the first point properly. And it goes the same thing with time. Time travels this way on our charts. Time travels this way on our charts. So you have to create the first moment, higher time frame, higher architecture, just like 4 hours bigger than a 1 hour. This is in existence before this. So this is a grandfather to this, just like this is a grandfather to this. So it's all the same. Everything decycles in day trading. Yep, and then it gives you the criteria of what can turn into a scalp. What turns a scalp into a swing, and then you have your perfect swing trades, and then you do the same thing as you mark forward or move forward in swing trades, which is maybe what we'll work on next week. Oh, actually 2 weeks from now. But I think anyways, it would be the same theory repeating itself, just on higher information. It would be more practice with more different things, because I think that's good for today.